Good morning and welcome to this morning's live stream. This is the morning market review and it is the 13th of February. My name is Russell Shaw, I'm a senior market specialist at FXCM. And just before we get into the analysis, let's just go through some of our disclaimers. I'm going to just keep a high risk investment warning on screen for a few moments and then we'll move to our commentaries disclaimer. Hey Raj, good morning to you. Welcome as always. All right, another few seconds for the high risk investment warning. Let's bring up market commentaries disclaimer. All right, keep this on screen for a few moments as well. All right, terrific. And let's go through and just have a quick look at the S&P 500. Let's bring that up. Because this is the S&P 500, it's the weekly chart. And I want to just zoom in here. Let's get it nice and close. All right, what do we see here? So what we have is an overbought condition. We've talked about this. Okay, here's the overbought condition. Let's just fix this up. That's better. So you can see the overbought condition, and it is at a time when we are moving a fair distance away from the EMA. Okay, so there might be some sort of elastic effect here. It might snap back the it might snap back towards the exponential moving average. It doesn't have to. Another alternate scenario is we sort of drift here and the EMA catches up to the candlestick, but there is a fair gap between EMA and price. Just something that we need to acknowledge. Now, given the fact that we are moving towards the overbought, just take a look at what's happening on our weekly candlestick with the S&P 500. It's starting to turn red. And I just wonder if that is the beginning of a normalization of the indicator. So we just want to keep an eye on the price action. It's only the second day of the week, right? But we've got a very, very short, thin, small candlestick. So really not much movement here by the bulls. And that's after a number of weeks of really superb bullish action. So just keep an eye on whether we're going to start normalizing in terms of the RSI. Good morning, Kim. Lovely to have you on the webinar as always. Hello, Mia. Welcome, welcome, welcome. Let's just go a little closer into the price action, see what's happening on the daily chart. Okay, so we're just going to bring up the S&P 500 daily chart and we will zoom into that price action as well. Remember that we are overbought on the weekly chart, and if we're overbought on the weekly chart, is there some sign of normalization? All right, let's just go ahead and bring up the daily chart. You should be able to see the daily chart now. Okay, and the daily chart also had an element of being overbought, and you can see that well, we may still consider it as overbought. The idea here is that yesterday's price action was corrective in some regard. It was corrective in some regard. Let's just take a look at yesterday's price action. Hey Anna, good morning to you and welcome. All right, what happened yesterday? Let's zoom in even further. What happened yesterday? Let's bring in an arrow. And over here, you can see it's a gravestone doji, isn't it? In other words, we had price going up until the high of the day was reached. Once the high of the day was reached, the bulls lost control and the bears took over. Now, we still are in zone 1. So we still are in the bullish area. And there has been some sort of normalization in the RSI. So that in of itself seems healthy. I just want to reiterate that the weekly chart hasn't cleared yet. Weekly chart, it's not easy to time on a weekly chart. The lower the time frame, the easier sort of the timing mechanism. The fact that we have moved down here on the RSI on the daily, I think is encouraging. And the fact that we're in zone 1, bullish. I just want to bring up the weekly chart again. Just go through back. So now we've gone to weekly. This is weekly chart, S&P. There's still some froth here. And just keep in mind that we probably need to normalize at some stage. Now, before we carry on, let's just talk about what's driving the market. What are the key drivers? What are the underlying fundamentals here? And are they still in place? And are they bullish or are they bearish? So it comes down to, I think, 4 drivers. It comes down to 4. The first is earnings. What's happening with earnings? Earnings has been very good in terms of the fourth quarter earnings. As of the companies that have released, there's been 75% that have beaten expectation. 75% of companies have beaten earnings expectation, which is slightly higher than the sort of recent mean. Okay, so we're having a very good earnings season. So earnings are really good. The other point that we have to, I think, not concentrate on, I just acknowledge, is that GDP growth is good. So if you're in expansion, if your economy is growing, you'd expect top line to be growing. Okay. There is moderation of inflation. We're getting inflation data today. Very, very important. Does the data today carry on showing that moderation? What times are coming out? 3:30 ZA, 1:30 GMT. Very important data point coming out, CPI data. And then the other driver is interest rates, yields, and the expectation that the Fed is going to be loosening policy up this year. Now, we've seen that the loose policy has, I guess, been pushed back somewhat. We were expecting a March cut at the beginning of the year. That's been priced out. There's no March cut. The question now, is there going to be a May cut? And we have to watch the probabilities here. They're not as strong as I thought they would be. The probability for a May cut is only just shy of 50%. Well, it's not exactly true. A 25 basis point is at 48.3%. A 50 basis point, 25 basis point cut at 48.3%. 50 basis point cut at 6.4%. So we're looking at about 55% chance. 55% chance, I guess, in terms of a cut. That's not quite as strong as I thought it would be. So what we are suggesting here is that if a May cut continues to be priced out, I think we're facing headwinds again. And if we're facing headwinds again, well, just keep an eye on the zone. This is the daily chart of the S&P, and let's just see if that S&P starts moving in terms of the probabilities of rate cuts now for May. Now, given the fact that we are overbought, on a weekly scale, and if there is some sort of normalization, because we've got such good earnings, because the economic growth is pretty good, because CPI is moderating, I think that the dips are going to be very compelling here. And if the dips are very compelling here, they should be supported by the bulls, right? Should be supported by the bulls. So we get as we've said in the past, the dips in the uptrend are something that we should for sure keep an eye on, right? These kind of dips in the uptrend are something that would be compelling to the markets, given that the underlying drivers are still bullish. Okay, they're still bullish. All right. Now, let's just move this over, and you can see the dip. Okay, the dip in the uptrend there, potentially pretty compelling. Let's take a look at DAX. Now, when we're looking at DAX, I want you guys to keep in the back of your minds the fact that the S&P is overbought. If the S&P is overbought, risk markets tend to be very tightly correlated. So if there is some sort of pullback in the US side of the markets, and that would be a normalization of the weekly overbought condition, it's likely it would affect global markets. Keep that in mind as we take a look at the DAX. We're going to go through to DAX weekly now. Okay. So the DAX weekly is looking, I think, quite positive. Positive in that the reference candle has resolved to the upside. So we've got this bullish reference candle, and we've got this 30-week exponential moving average that is still pointing up. But there is a slight indictment on the weekly, and that's the last three candlesticks. Just take a look at the last three candlesticks on the DAX. The fact that we've got this bullish reference candle is not really building up to a weekly swing. So the candle third from the end, it's a doji, candle of uncertainty, followed by, I would suggest, another doji. So 2 weeks of uncertainty in the DAX. And then we've got a very short candlestick with the current week's trade. So just these last three candles, I think, are not being particularly helpful to the bullish setup given by the reference candle here. So the reference candle here, not really giving the impulse that that the potential seemed to suggest. The fact of the matter is that despite the lack of volatility over the last 2 weeks, we do have a underlying bullish momentum. Now, bear in mind, although this RSI is not overbought, if there is some sort of pullback on the US side of the market, it probably catches DAX as well. Let's just go down to the daily chart and then perhaps the hourly. See if there is something that the DAX is going to give us today. So what's happening on the DAX daily chart? Just going to bring that up for you. Yes, it is valid to look at the stochastic. We can take a look at the stochastic. Let's bring that up before we look at the DAX daily chart. I'll just go through to indicators here. Let's bring in those stochastic here, see if it gives us any further information there, Anna. The fact of the matter is the underlying bullish momentum, the underlying bullish momentum that is represented by the RSI, well, there is some bullish momentum here in the stochastic as well. If it stays in the sort of upper quintile, upper quartile, of course that's going to be bullish. Of course that's going to be bullish. And the longer that we stay in the upper quintile, the longer that we stay in the upper quartile, the greater the likelihood that we actually get that bullish volatility that the bullish reference candle is potentially referring to, right? At the moment, I guess the way to look at the last 2 weeks is that there's a lot of buildup of potential energy, a lot of buildup. So we've got a tremendous amount of potential sitting, but it hasn't transferred to that kinetic, to the actual market participants taking it to that sort of breakout upwards. Does that sort of answer the question there, Anna? Just let me know. The fact of the matter is that the stochastic is showing us that there is that underlying bullishness, but the candlesticks have to prove themselves to us. The last two weeks have been dojis. Dojis really not rising to the occasion. That's disappointing. I feel that the DAX. All right, cheers, Raj. Have a great day. I feel that the DAX had more to offer 2 weeks ago. Let's just go through to the daily chart here. I'm just going to share that with you. Bear with me for a moment. All right. This is the DAX daily. Okay. Here's the DAX. Now, what we have pointed out, these line studies, it's sort of wait and see. Take a look at, I think we're getting a lot more information from the daily chart. So we can see that these line studies we put in, maybe a week ago, maybe a little bit more. There was support over here. The support held DAX. It moved from zone 3 into zone 1. So that was positive. There was an expansion in the Bollingers. That looked extremely positive. We drew in the expansion in the Bollingers, and then it's just flattened out. So again, it's just a matter of that potential energy not really converting. It's just moved sideways here. And we are still tending towards the bullish area. We're on the border of zone 1 and zone 2. Let's be optimistic here. Let's say that we're still in zone 1. And if that is the case, all right, is the hourly chart going to give us anything here? So we'll just go down to the DAX hourly and see what the indicators are giving us on the DAX hourly. Okay, so this is the hourly chart. We've got about just less than 2 minutes for the cash open. And remember, we've got this buildup of potential energy that we're talking about. This candle, so the setup before the cash open, does have some bullishness to it. You can see that it has a buying tail. There is a slight support area over here. Okay. What we are really waiting for is for the EMAs to cross bullishly. So that would be trigger 1. And we would also want to see the stochastic cross bullishly. That would be trigger 2. So if we get those two triggers, then maybe that potential energy is starting to transfer to sort of a kinetic energy. So I hope this sort of the science reference makes some sort of sense. And then the idea here is if we can move to the upper quintile, then we may see the DAX starting to move. Now, there's a caveat here. Okay, there's a caveat here. And, all right, cheers, Kim. The caveat here is, of course, remember that the US markets are looking frothy. And I think if that froth plays out in the US markets, it's going to take the DAX with it. It's going to take the DAX with it. All right. Let's just take a look at US dollar. And remember, the US dollar is a safe haven. So if there's movement into the dollar, I think that acts as a headwind on the risk markets. Okay, and if the money moves, if the dollar's coming down, then potentially uh, then there's money moving into the risk. I think there is a certain hold of breath until CPI. Um, Expectations there, Anna, are that there should be some sort of moderation. So we should see headline CPI coming down. We should see core CPI coming down. So I think we are heading towards that 2%. Where the risk comes in is if there's going to be upside surprises. If there's upside surprises, then the market's going to reprice quite quickly. So there could be some sort of stationarity, some sort of pause before the CPI announcement. This is interesting. So we've just gone cash open, and just the orders. The orders have, take a look what's happened. So we're talking about this bullishness setting up just before the cash open. Here's the cash open. Now the cash opens generally algos kicking in. It's generally pent up orders. It's pushing it down, but then the support level's holding here. And I think what you need to do is you just need to wait the first hour just to get all those pent up orders out of the way, just to get the algos to calm down. And then if we get the trigger 1, trigger 2, and we get the stochastic moving up to the upper quintile, then of course we've got the that potential energy hopefully starting to release. Let's take a look at dollar. Let's just see what's happening dollar now that the European markets have opened. So let's do a analysis from the daily through to the hourly. So let's go through to hourly first. Bring up US dollar, not hourly, I beg your pardon. Let's go through to daily first. Okay, so this is dollar. We've got this resistance area for the US dollar that's still playing out. As we speak, the US dollar has got its position in zone 1, and if it's in zone 1, I think, well, there is still some perhaps concern out there, money trying to find its way into safety. I would be quite interested to see what happens with US dollar when the SP 500 normalizes. When it normalizes, I was wondering what your take is on the extreme overbought in tech. I think it's got to normalize. My take is that you can't stay overbought for long. The longer you stay overbought, the more extreme the reaction is going to be. The overbought condition, actually, we're seeing it in only some of the tech instruments. So we're seeing it in NVIDIA. NVIDIA is overbought. NVIDIA is actually releasing its results in a week's time. But there is, I think, just think about it in terms of the underlying fundamentals here as opposed to technicals, okay? What's the underlying fundamentals for the graphics processing unit, the GPUs? I think that the demand is still sort of blowout demand, right? I think that NVIDIA's fundamentals are really, really good. What I think the overbought condition is effectively showing us, and I think, is that it's probably ripe for some profit taking. A lot of money's been made. It's time to bank that money, but I think that the story hasn't changed. I think that NVIDIA is still very much in a expansionary phase, bull market, and any sort of normalization here is going to just be supported by the bulls who come in at a better price. The longer that it stays overbought, of course, the more severe that profit taking is going to be, the more severe the pullback. But I think that we may be seeing a case of buy the rumor, sell the fact. Buy the rumor, sell the fact. So when NVIDIA's results come out, maybe that is a catalyst for some sort of profit taking. But again, I think that profit taking ultimately gets supported. The overbought condition just if you take a look at the Nasdaq, which we did, Nasdaq is tending towards overbought, but it's really the S&P 500 that is overbought. So that's just, I think, interesting. Earnings, moderation of inflation, the fact that the Fed is probably going to be loosening, and the fact that we still got good underlying economic growth are all positive fundamentals for the stock markets. I don't see us changing trend anytime soon. And at the same time, just by the way, I don't see any rampant speculation out there. Do you see it? I don't see that rampant speculation. Remember, that last phase of the bull market is that rampant speculation. I still think we're in phase two, the improved earnings. The earnings, I think, is being really good, really good. I don't see that. I don't see that rampant speculation, which is extremely dangerous. All right, let's leave it there. If you found this useful, guys, please go ahead and hit that boost button. I would appreciate it. It would help get the webinar, the live stream disseminated. We will do it all again tomorrow. It's feeling like a feeding frenzy. Is it? I don't have that feeling quite yet, Anna. It's interesting that you're saying that you're feeling like it is a feeding frenzy. I think it could get worse. I'm not there has been a lot of retail money that's come in, but I don't see the pangs of that rampant speculation just yet. Let's see if this perceived feeding frenzy, as you say, builds up. Let's see if it builds up. All right. Any other comments or questions, guys? All right. Let's wrap up here. Thanks very much for joining me this morning. Please join me again tomorrow morning. I want to wish you guys a great day ahead. Thanks very much, everyone.